And yeah, this question here is from Charles. So what's wanted here is the ability to restrict trade direction signals based on a support and resistance line or an indicator or zone, however you want to phrase it, right? So it looks like, from this screenshot here, we have a kind of what looks like could be a pivot line here. And so, for example, if price is right below this pivot line, then we don't want to take any long trades going into that resistance zone. But short trades are okay. Now, once price breaks above our resistance and it becomes support, then we don't want to take any short trades, right, while price is above it. But long trades will be okay here. So that's basically the question. And so let me get the chart set up, and we'll get this done. All right, so on my chart, I have Ninja's pivot indicator already set up on my chart there. So there you go. You can see all those pivot lines. So we'll use the pivot indicator here for this example. Okay, so let me get BloodHound open. So I already have it on the chart here. So I'll just click the button there on the top, and that opens up our BloodHound interface. And first thing I need to do is put a file name in there. So let's get today's date. Plug today's date in there. All right, so we have a file name in there. We're ready to go. So I'm going to just start working on the logic tab here. And let's create a new logic template, like so. All right, let's see. Well, need to give some kind of name for this logic template. Let's see. All right, something like this. Support resistance signal blocking, I guess, is a suitable name. All right, so we're dealing with basically support and resistance here, right? So while I have the pivot indicator on the chart, what we're going to demonstrate can also use a moving average line as well, right? Any kind of indicator that plots on top of price can be used as well. So, but I'm going to use the pivots because that's what was in the screenshot. But also, the pivots indicator is a little more sophisticated because it has multiple plot lines, right? The pivots, if I keep shrinking this out, right? The pivots indicator has multiple support resistance lines, which makes it a little unique, versus other kind of indicators there, right? So, okay, let's shrink this back up here. All right, so switching over to BloodHound. So what we're going to do is grab the support and resistance solver here. There we go, at the bottom. Right, so we have an actual support resistance solver, which is uniquely designed to handle support resistance type situations. So let's connect that up. And first thing to know about the support resistance is the mode of operation, right? There's a headwind and a tailwind. And the way the question was answered is we want to use headwind mode. So let's see, so actually let me just use the chart here. So for example, hold on, let me fade this moving average back a little bit there. Okay, so let's say when price is just below a resistance line, then you don't want to take any long trades going into resistance, right? So that's basically, that's headwind. So think of the resistance line as headwind, right? So if you're wanting to trade long, but you've got this resistance line here, well, this resistance becomes a headwind to price, moving up and through it, right? So yeah, so think of this as headwind. And the same is true when price is coming down, right? So when price is coming down to support, right? If you're trying to take a short trade through support, well, that support line becomes kind of a headwind for price to keep going further south. All right. So our support resistance solver, we want to use headwind, right? And just briefly, tailwind is basically the opposite. So I'm going to kind of keep this example or explanation of the support resistance kind of brief. So there's some other recorded videos out there that go into great detail for the support resistance solver, and I'll point those out afterwards here. But for this question, we're going to use headwind. We want to use an indicator. So we're using the pivots indicator in this example. So let's set use indicator to true. There we go. And so you'll see the input section becomes available once we set use indicator to true, right? This indicator section opens up. So if I turn it back off, you'll see the indicator section disappears. If I turn it back on, there we go. This indicator section opens back up here. So let's go select our pivots indicator. Okay. One thing to note about Ninja's pivot indicator is that the daily bars doesn't work properly when there are indicators used inside of a system, like inside of BloodHound. So what Ninja says is that you have to calculate from intraday data. So make sure you switch your pivot over to calculate from intraday data. So, all right, next is when you select the pivot lines that you want to use. So in this example, let's just select all of them. Right. So the support resistance solver is the only solver where you can have all the plots selected, right? And that's because that's because of the pivots indicator, right? Which one indicator has multiple support resistance lines. So there we go. So let's just select them all, like so. We'll click OK. And next, we need to set up our distances here. So let's say, for example, we want to make sure that there's no short trades within 10 ticks of the support line here, right? Actually, let's see. We're on the NQ. NQ, so how about if we do 8 ticks? So that'd be 2 points. So what I'm going to do is open up the distances, and so instead of using ATRs, I'm going to switch these over to ticks. All right, because ticks is a lot easier to visualize than ATRs. And then set up to 8 ticks on both of those. All right, so let's take a look and get an understanding of what we're seeing on the chart so far. So All right, when price is basically in this no man's land here, so let's kind of draw a circle there, or a square, right? So we kind of have this no man's land here. And if we take a look at BloodHound, so let's put a little matching square down here. You're right, you'll see that this solver is outputting a long and a short signal at the same time down here. So what that means is that you're able to take a long and a short trade. All right, so this support resistance solver is permitting a long and a short trade, while price is in this no man's land. Now, once price gets within 8 ticks of our support line here, then we can see the output changes. So let's just isolate that, and then let me point out that the output here, and I'll fill that in. So you'll notice here that there's no short output, right? So this solver is missing the short output. So what that does is that prevents short trades, right? That would prevent any kind of short signal from appearing in this area here, right? And so to further demonstrate what we're kind of missing, so we're not seeing the big picture right now. What we're missing is a AND node. So we're going to need an AND node in there. And then let me just generate some signals here. So I'm going to take an inflection solver that's just going to generate a bunch of signals, a bunch of random signals. So I'm just going to create a price inflection solver here, right? So we can see this price inflection, right? It's just generating a bunch of random signals here, right? Whenever the bar reverses direction, we're getting a bunch of signals. So this will be kind of our filter here. So if we take a look here, let's mark this, right? So we have a long signal there, and we have a short signal there. And let me adjust the scaling here. And let's see, I can't move that arrow down. It's kind of unfortunate with one of Ninja's most recent updates. You can't move the drawing objects wherever you want now. For some reason, it's kind of broken. Okay, but anyways. All right, so there we go. I've got the long and the short signals marked. And so remember, in this area here, with this lower rectangle, what we're going to do is we're going to filter out that short signal there. So let's plug that into an AND node. And now we take a look, there we go, that short signal there has been filtered out when price is right up against our support line, like so. All right, let's go take a look at a couple of other places here. And here, let's take a look at this area here. Okay, so if we look at our support resistance solver, let's see, yeah, well, so let's take a look there. So that bar, this bar here is missing a long output. And this bar here is missing a long output. So let's just kind of circle both of those. There. Right, so there we go. We've marked the 2 bars where there's no long outputs. That means that no long signal can be generated on those 2 bars. And let's see here, actually. Let's take a look at our signals coming in. And yeah, there we go. So we do actually have a long signal on that bar. Right, so looking at our random signal generator there, right, we do have a long signal. And if we take a look at the AND node, we can see our long signal there has been removed because price is too close to our resistance line there. All right, so let's just take a look at our support resistance solver again. So the key settings for our support resistance is headwind mode, which that's the default setting. We want to use an indicator, so we set this to true. Then plug in your indicator, right? So we could also use like a moving average. If you wanted to, you could plug in a moving average as well into the support resistance solver. So that way if price, if price gets too close to our support resistance solver, right, you could, you could block trade signals such as we see here in this area. So, right, so there you go, plug in your indicator, and then set your distances. All right. Basically the way most people want to use headwind, or the way that most people, basically the way that most people want to use BloodHound is, they want to use it in a digital kind of fashion instead of using BloodHound's fuzzy logic. So if you're not using BloodHound's fuzzy logic, then on your distances, just set both of the distances the same, right? Set your minimum distance and your ideal distance the same. So now, if you'd like to get some more in-depth understanding of how the support resistance solver works, if you'd like to take a look at all the bells and whistles here, like what's tailwind mode versus headwind mode, and what's the used channel, and the price point intervals, and all right, there's a lot of other options here. There's outputs here as well. So if you want to, get some training on and learn the rest of the settings here, then I'll show you where that's at in our documentation here. So we can go to help and then click on documentation. That'll bring up your web browser. And if we scroll down under the confidence solvers, right, you can see a list of solvers down here. So scroll down to the bottom. There's the support and resistance solver. And there is a in-depth video there that covers all the settings for the support resistance solver. So just scroll down to the video. And there's also some examples down below here too. So if you just kind of want the quick basics of tailwind mode, there you go. There's an example there. If price gaps up, but then I guess when the bar closes lower, and said same bar has created a new high, then go short. So this sounds, oops, didn't mean to double click there. This sounds like a stock trading question here. So let me switch over to daily bars. And let me clean up my chart first. So let's go to daily bars and see if I can find such a thing. And also, let's see, I'll need to change my session template. And I'm not going to get any gaps with futures. So let's take a look at Caterpillar here. All right, there we go. We're getting some gaps with Caterpillar. And hey, check this out. All right. So we got one here. We got an example. So there's a gap up. A new high was made, and it closed down. So, all right. So we got an example right there. Let's see. We're also going to need some other. We're going to need an indicator that detects when a new high is made, right? So let's see here. Let's take a look at Ninja's. All right, I'm going to use the Donchian Channel here, and I'll just use the default 14 period. Yeah, that'll work good enough. So there we go. So the Donchian indicator, right, helps point us out when the a new high or new low is being made, right? All right, and we still have another good example right there. So there's a gap up with a close down and a new high made. Okay. All right, let's see. So let's get BloodHound open and let's go to work. Okay, so I'm going to make a new logic template here. Use the new button. And I've got a new logic template made here. So let's give this a name here. All right, so we'll look for gaps up with a closing down bar. All right, so let's see. What's the definition of a gap up? So basically, I guess it's when the bar opens higher than the previous bar. Then the previous bar is high. So we're going to have to kind of talk this out and define things. So as long as the next bar, right, as long as the next bar opens, well, let's see, even when the next bar opens higher, that's not necessarily indicative of a gap up. So let's see, another way you could define a gap up is if there's a gap between the low of the bar versus the previous bar's high, you know, that also could be the definition of a gap, you know, or maybe just this, there's a minimum distance here that defines a gap. So let's, I'm going to, I guess, take some liberty here and kind of create my own definition of a gap. And I'm going to say if we have a gap of, let's say, $2. All right, so that square there is about $2. And there, we'll make it $2 even. Okay, so we have a $2 square that represents $2 there. All right, so as long as we get, a gap higher of $2. So basically, as long as the high or low of the bar doesn't touch, doesn't come down within this $2 range of the high of the previous bar, that'll define our gap up here. Right. So let's do this to check for this $2 gap here. I'm going to use a comparison solver. So we're going to compare the current bar's high. So let's scroll this back here. So let's say we're on the gap day. So we're going to take the low of the current bar and compare it to the high of the previous bar, right? One bar back. And we're going to make sure that this low of the current bar has at least a $2 distance from the high of the previous bar. Right? So let's set up this comparison solver to do that. So first let's plug it in here. And let's see here. Let me give this some kind of a name here. All right, so we're taking the low of the current bar, which has an index of 0, and we want basically a 2-point difference from the high of the previous bar. All right, so anyways, you know, you can give any kind of name you want to these solvers, whatever kind of makes sense to you. So, but I generally write things out kind of in a programmatic way, logical way, I guess you could say. All right, so the next step, let's set input A and input B. So input A is going to be the low, right? The low of the current bar. So that's going to be price. So instead of an indicator value, we want price. So let's set that to price. And so we're going to set our prices to low. So we'll set both our long and our short to the low price. We're going to leave the look back period to 1. Now input B, this is also going to be price. But B is going to be the high of the previous bar. So let's set our prices to high. There we go. And we want that to be 1 bar back, so the look back period goes to 2. Set that to 2. All right, one more thing to do is we need to set our distances here. So instead of ticks, let's switch over to points. So we're dealing with stocks here. So let's put 2 points in there for $2. All right. And let's see, we're interested in, so let's see, let's take a look here. So we can see we've already got, you know, we got some outputs here. You know, we have some signals, but they're not correct yet. So actually what we're looking for is a short signal when we get a gap up, right? If we look at the question here, when we get a gap up, we're looking for a short signal. Right. So we want this long signal to actually be converted into a short signal. So let's take one step at a time. So let's turn off the long output here. We're not really interested in the long outputs. So let's set them all to 0. Now, the short outputs, we're not getting what we're wanting. But if we reverse the short outputs, now we're getting So now we have this gap up and we have a short signal. So the reason why this is working is, let's take a look at the description. If A is greater than B by 2 points, that's what our short output is set to. If A is greater than B by 2 points. So what's A? A is the low price. A is the low price of the current bar. Right? And what's B? So if A is greater than B, right? So A is our low price, and B is our previous high price, right? So input B is our previous high price. So there we go. A is greater than B. So A, again, being our low, is greater than the high of the previous bar by 2 points. So that's how we know that for a short output, this is the condition that we want to turn on by putting a 1 in there. So, all right, so that's part of it. So that's our gap up. Now there's some other requirements here. So we need to make sure that a new high was made as well. We want to make sure a new high was made. So how can we do that? Well, we can, that's why we have the Donchian channel here. So we can check to see, did the Donchian channel move up? Yeah, did our Donchian channel move up? Right, we can see that whenever the upper channel line, whenever it's sloping up, we know that new highs are being made, right? And when the Donchian channel goes flat, then a new high is not being made. There's no highs. But then as soon as it starts sloping up again, a new high is being made. So we can just check the slope of our indicator. Check the slope of that Donchian channel's upper channel, and make sure that it's sloping up. That way we know a new high is being made. So let's grab a slope solver. All right, so let's see here. We can call this like the new high. And let's plug in our indicator here. So we're using the Donchian channel, or Donchian channel. Not sure how that's pronounced properly, but in any case, we're using this guy, and I'm just using the default period of 14. Now, what we're looking at is the upper channel. Right, we're only interested in the upper channel because we're looking for gaps up. So let's have those selected. And there we go. So we can see, right, whenever the Donchian channel is whenever the upper channel is sloping up or moving higher, that's telling us that new daily highs are being made. But you notice this is a long signal. This is a long output. But remember, we're looking for shorts. So when price gaps higher, we're actually looking for a short condition. So we need to reverse this. We need to reverse this output here. So we have a couple of output options here. So the output in direction, we're going to turn that off, because we don't want an output in the direction of the slope. We want an output that is against the direction, or in the opposite direction, right? So as the upper channel slopes up, we want an output that's opposite of sloping up, right? We want a short output, which would be typically for, so a short output is typically for sloping down, but we're sloping up, so therefore we want to use output against direction to get that opposite output. So here we go, our gap bar of interest there, right? We have a short output now. Okay, so we have two conditions, right? So here's our gap, I guess let's put the word gap in the name there. Okay, so we have two conditions built. So now we need to start grabbing a AND node and plug those in there. All right. So we're getting there. And there's one more requirement here. So closes lower. Right? So we're looking for a bar that closes lower. So it just so happens to be that this bar here did close down. Right? It closed down. So we're looking for the bar direction basically. Whether, to check whether a bar closes up higher or closes lower, that would just be the direction of the bar. So we can grab a bar direction here. Right, if we take a look at the bar direction, right, this is just simply telling us, is this an up bar or a down bar? Right, so let's plug that in there. And there we go. So that's it. So now let's kind of take take a step back and discover why do we need all three solvers here, right? So let's take a look at our gap. Let's take a look at our gap detection here, right? So this solver is detecting gaps. And let's take a look at the chart. Let's see what other gaps we have here. Yeah, so there's a gap higher. But that actually made a new high. Yep. So I'm going to see if I can find a gap that does not make a new high. Oh, okay, here we go. Great. Finally, I got one. So, it's interesting. It looks like, we can see a lot of gaps, but it looks like maybe our looking for a $2 gap might be a bit extreme. So, how about if I knock that down to just a $1 gap? A 1 point gap, we should get a lot more signals. And great. Yeah, here we go. So, let's take a look at these two signals here. There we go. So we got a gap and a gap. But, so we have gaps, but there's two things missing here, right? First of all, these are up bars. So these days actually closed higher. They closed higher instead of closing lower, right? And also these bars didn't make new highs. Right? They didn't make new highs. So that's why we need these other solvers in here to make sure that all the rules are accounted for here. So let's kind of do this one step at a time. Let's take a look at the AND node here. So we have the gap rule, and then we have a new high rule. So let me let's go back to the chart. And yeah, let's just take a look at this right here. Great. So we have a gap higher, we have a new high made, but we can see that this actually the bar closed higher, right? So this was a up day, even though, yeah, but what we're looking for is for closes lower, right? So basically we're looking for a down bar. So we're looking for a gap up, but a down bar. So this actually doesn't quite qualify. So once we take our bar direction, plug that in there, now both of those signals were filtered out. So there we go. So that's why we need all three of these solvers to account for every component of the question there. All right, well, with that, let's take a look and see what we have here. So we definitely get lots of gaps, but a lot of these bars are closing up on these up gaps. There's not too many bars closing down when they're gapping up. And interesting. So looks like this is a pretty rare occurrence. There we go, there's one more. Nice. Yep, this one had a nice deep pullback after that gap up. All right, guys. Yeah, with that, we'll wrap this up here. So if I don't see you tomorrow, then have a good weekend. All right, guys. Hope to see you next week. Bye-bye.